If you're aiming to meet real estate professional or material participation standards, it's essential to know which activities count and how to document them. The IRS is specific about the types of activities that qualify. Here are some examples of what does and does not count towards meeting the requirements for material participation. First, qualifying activities: meeting with contractors, inspectors, or vendors, performing or supervising repairs and maintenance such as landscaping, painting, or plumbing, managing day-to-day operations like tenant issues and lease agreements, preparing properties for rent, including cleaning or staging, scheduling and overseeing property improvements or capital upgrades, traveling to and inspecting the property for management purposes, communicating directly with tenants or potential renters, including emails, calls, and text messages. Non-qualified activities. This is time spent on education or training, such as seminars or reading books about real estate. Those do not qualify. Investor activities like reviewing financial reports or researching future investments. Other items like bookkeeping, tax preparation, and other purely administrative work unrelated to the day-to-day operations of the rental property. Finally, delegated activities managed entirely by a property manager or a third party. Proving activities during an audit. The IRS expects detailed records to verify your claims. Here's what you'll need to have on hand. Number one, time logs. Maintain a daily or weekly log documenting the date, the time spent, and description of the activities performed. Number two, receipts and invoices. Attach evidence like receipts for materials purchased, invoices for repairs, or contracts with your vendors. Number three, emails and communication. Keep copies of your emails or your letters exchanged with your tenants, your contractors, or your agents. Number four, mileage logs. If travel to and from the property is included, record the purpose of the trip, the distance traveled, and the date. Number five, calendars or schedules. If applicable, keep copies of your schedules for appointments, for meetings, or inspections. A key tip: the IRS may scrutinize vague or inflated time estimates, so it's crucial to be specific. Avoid using round numbers, for example, 8 hours every day. Instead, provide realistic and varied entries. For example, 3.5 hours repairing leaky faucets on March 12th. By keeping this type of thorough and accurate documentation, you'll not only meet the requirements, but you also have the evidence to back it up if the IRS questions your participation. Material participation, particularly for individuals who also have other income, can be an audit trigger. So be aware of what qualifies and what doesn't, and make sure you're doing what you need to properly track and document those activities.